Hello everyone, this is Bella. Today's video will summary what the chairman of Federal Reserve has said in his interview. In the early morning of February 8, Federal Reserve Chairman Jerome Powell attended an event at the Economic Club in Washington and was interviewed by reporters. In the 40-minute interview, Powell answered key questions such as inflation and the path of interest rate hikes. Last week, the Federal Reserve raised interest rates by 25 basis points as scheduled, and the market expects only 2 more interest rate hikes this year. However, strong employment data released last Friday revived fears of a forceful rate hike. Powell said that it is appropriate to continue raising interest rates, and the biggest challenge facing the Fed at present is to complete the process of reducing inflation. He admitted that inflation in the United States has begun to cool down, but the prices of service industries other than real estate have not yet fallen, so patience is needed. If the data continues to be stronger than expected, the Fed will raise interest rates more. Although Powell's speech was accused of being hawkish, because inflation is cooling, U.S. stocks closed up on Tuesday local time. The Dow rose 265.67 points, or 0.78%, to 34,156.69 points, 12,113.79 points. The S&P 500 index rose 52.92 points, or 1.29%, to 4,164.00 points. The Fed's goal is clear: 2% inflation target may be achieved next year. Data released by the U.S. Department of Labor on Friday showed that non-farm payrolls in the U.S. surged by 517,000 in January, far exceeding expectations, and the unemployment rate fell to 3.4%, the lowest level since 1969. In this regard, Powell expressed surprise. Of all the people he knows, no one has predicted this, he said. But this incident itself can explain why the Fed believes that reducing inflation will be a long process. Powell pointed out that a low unemployment rate indicates a good economy, which in itself is a good thing. At present, the demand in the U.S. job market is 5 million more than the supply, which was not the case before the epidemic. Now it's time to take the lead and keep it safe. However, he also warned that if the economic data continues to exceed expectations, the Fed will inevitably raise interest rates more, and the terminal interest rate may reach a level higher than previously expected. Of greatest concern, Powell said, was inflation related to core services, excluding housing. Overall, U.S. inflation should come down significantly this year, but bringing inflation down to the Fed's 2% target will likely not be achieved until next year, he said. Powell also further discussed what the data the Fed often refers to is. In addition to regular economic data, the 12 regional Feds also have access to various industries. The terminal interest rate of this round of interest rate hike cycle will reach about 5.4%. On the same day as Powell spoke, Minneapolis Fed President Kashkari, who has a vote on monetary policy through 2023, said the Fed had not made enough progress to declare victory. He expects the Fed's terminal interest rate in this round of interest rate hike cycle will reach around 5.4%. According to Bloomberg's analysis, the strength of the labor market will stimulate wage growth and further solidify the trend of rising prices. Recent comments from Fed officials suggest that officials have not seen much impact from tightening monetary policy in the labor market, and that the Fed will continue to raise interest rates until there is substantial evidence that they are convinced that inflation is on a sustained decline on track. Sean Cruz, chief trading strategist at TD Ameritrade in Chicago, said Powell's reiteration that inflation will fall means he may be less hawkish on tightening policy. They are not expected to cut rates anytime soon. But the Fed is doing what they need to do. The CPI figures are due next week and everyone should be watching closely. I hope you find my video useful and don't forget to subscribe to my channel and give a thumb up after this video. Thank you, see you in the next video. Bye.